If you're one of the millions of people that will be coming off one of the COVID era interest rates in the next 6 months, then don't panic, stay calm, speak to a mortgage broker. You're going to need to make sure that you plan in advance. Don't wait until the last minute. A lot of people wait until the last minute, and by waiting to the last minute, they end up with fewer choices, or they end up having to rush through the process and not getting the very best deal for them. My name is Anthony Lindsay. I'm going to talk through some of the options you have if you currently have a really low interest rate on a fixed rate that is coming to an end within the next 6 months. Make sure you watch until the end. Make sure you like and subscribe, and make sure you share this video with anyone in a similar situation. My name is Anthony Lindsay, and I've been in finance for over 30 years. I help people get mortgages. I help people understand the process of getting a mortgage better, that they can make a better choice. I don't give financial or legal advice, and I don't give tax advice, but I will give you information that you can be an educated and well-informed consumer. So there's a lot of people that over the next couple of months, over the next 6 months, they say, are going to be coming off really low interest rates from the COVID era. So interest rates starting with a one. Right now, the interest rates are starting with threes, fours, fives, depending on your circumstances. But the key thing that you need to know, and what you want to remember, is that you want to shop around. You want to make sure that you have choice. And the only way that you're going to do that really is by speaking to a mortgage broker. So the first piece of advice that I would give you is make sure that you don't wait. Find out what your current lender is offering you. So if you have a interest rate that's really low and it's ending soon, what usually happens about 3-4 months before that interest rate ends, your current lender will send you a letter. They'll advise you that your current fixed term is coming to an end, and they'll usually say, well, this is what we can do for you. And there's a few options of what you can do. The offer that they offer you, you can accept. You can look at that offer and talk to a broker and then shop around, or you can ignore it. A lot of people wait until the last minute, until something drastic happens in their life to do something. It's not good. It puts you under stress and pressure. And then if you do end up speaking to a mortgage broker, you transfer that stress and pressure to them. So make sure that you don't wait. You find out what your current lender can offer you before you speak to a mortgage broker. One of the things that you can consider if you have a low interest rate mortgage coming to an end within the next 6 months is reducing your current balance. So reducing your current balance. So if you find yourself in a situation where when you remortgage, you're going to potentially be struggling to make the higher payments, maybe you can reduce your balance. Some people do have savings, and I'm not giving financial advice in this sense. This is just one of the strategies that you can discuss with your mortgage broker. If you have some savings, you could potentially pay down your current mortgage at the very low interest rate that you're paying now. That way, when you go to remortgage at a higher rate, you're actually paying less off because you have a lower balance. So if you choose to, and you speak to your mortgage broker, one of the things to consider is to reduce your current balance based on the low interest rate that you're paying now. That way, when you remortgage, you're remortgaging less. Another thing to consider is extending the term when you remortgage. And what I mean by that is when I do mortgages for my clients, quite frequently they will say, I want a really short term. And it is our job, and we are required by law to give our clients the shortest term within their budget to pay off their mortgage. But let's just say I did a mortgage for someone and they're 35 years old and they're going to retire at 70. So they're 35, and I could have done a 35-year mortgage for them. But they said, no, no, I want to do a 15-year mortgage. I can afford to make the repayments. If we had done a 15-year mortgage, so the term is 15 years, and let's just say it was a 5-year fixed, At the end of that 5 years, they should, in theory, have about 10 years left to pay on their mortgage. However, when they remortgage, they don't have to do the new term over the remaining 10 years. They could do it over 15 years, they could do it over 20 years. It's only going to depend on what age they plan on retiring at and what that lender will do as far as working potentially beyond retirement or how they view retirement ages. So, one of the options is to pay down the mortgage, potentially out of savings, or make overpayments if and when you can. Another option is when you remortgage, you can extend the term. Another thing to consider when you do a remortgage, you could do a part repayment, part interest only mortgage. So you might currently be on a repayment mortgage. So if it's a residential home, I always recommend, depending on the circumstances, that you do a repayment mortgage because it's the home you live in. And frequently, people will do a repayment mortgage and look to repay it before they retire because they know when they retire, their finances will be a lot more static, less flexible, and they will have less earning potential. So, what they want to do is make sure either by the time they retire or before they retire that their mortgage is repaid. So they'll do what's called a repayment mortgage. However, if you're coming off a really low rate and you don't feel you'll have the budget when you remortgage to go onto the higher rates that are now in 2025, you may consider doing a part repayment, part interest only mortgage. That can reduce the amount that you're paying each month, but you will need to make sure that you have a solid exit strategy. So, by exit strategy, it means at the end of that term, part of the mortgage will have been paid off, but the part that you only pay an interest on will still remain. So, when that mortgage term ends, the lender will want to know how you plan on settling that balance. So, this is something that you want to discuss with your mortgage broker, potentially with your family, because this goes into estate planning. And estate planning is something that should be done as a family, not just as parents or just as an individual, because it can have impacts on future generations. Another thing that you can look at is remortgages versus product transfers. So, remortgages versus product transfers. So, because your current lender will have sent you a letter and you'll have an understanding of what they're currently offering you, the repayment side of things is understanding that you have a certain amount that you still owe. So you took out a mortgage, you have a repayment mortgage, you've paid it down. Now that fixed term is coming to an end. You can remortgage the outstanding amount. But you will want to understand how much that remortgage is going to cost you with your current lender. The reason why staying with your current lender can sometimes be the best way forward is if you stay with your current lender, the process is a lot easier. So if you're doing a product transfer as opposed to just doing a straight up remortgage, a product transfer would allow you to process the paperwork a lot quicker. It's less cumbersome. The lender already knows you. It's more of a paper exercise. I can do a product transfer in many cases in a couple of days. So you can consider a product transfer as opposed to a remortgage. The thing to consider as your fixed rate mortgage that is a COVID era low rate is coming to an end, do you want to remortgage, meaning go to another lender, or do you want to just do a product transfer with the existing lender? These are things to consider. What should you be doing? What I know you shouldn't be doing is nothing. Don't just wait until the last minute to resolve this issue. Start having a conversation with your mortgage broker. I would recommend 6 months before that rate ends because a remortgage can take a month or 2 months, depending on if you're going to another lender and depending on your criteria. But what you want to understand before you do any of this, you want to understand what the new payments are going to look like. So if you are currently paying, let's just say, £1,600 a month, and that's what you've been comfortable with because you took your mortgage out during COVID and you fixed it for a long time, which was quite smart. but it's coming to an end. If you're comfortable with that 1600, you may find that your new mortgage payments are going to be 2200 or 2300. But you want to know that in advance, that you can budget, you can look at your finances, you can look at your alternatives. So you have to make sure and start having the conversation now. I keep talking about speaking to a broker because a broker is going to be your best bet. So if your current lender is your bank, so you went directly to your bank, they can only talk to you about their products. And they do want to keep your business. So sometimes it is going to be less expensive. It's going to be less admin, less work, less stress to stay with them. But you don't want to do that if they're not offering the best rate. By speaking to a mortgage broker, they'll be able to compare the market like for like. So they'll understand that you have 15 years left. They'll understand, what your employment status is, what your visa status is, and they'll find you a lender that will lend the same amount, but maybe at a lower rate. But the starting point does need to be what your current lender is going to offer you on the remortgage or on the product transfer. That way they know what to beat. I would also recommend that you check your credit report. If you've missed mortgage payments in the last 6 months, 12 months, that can impact the options that you have. So you might find that your current lender is willing to do the product transfer for you. But if you went to another lender, because you've had some missed payments on your mortgages, you might find that they're not as willing to offer you the best rate. So this is why it's vital to speak to a mortgage broker, go through everything, look at your credit report, look at your retirement age, look at your income, look at all of your circumstances, that you can find out what the best comparison will be like for like. I'd recommend that you book a free mortgage capacity report with me. So I do a free mortgage capacity report. What we'll do is we'll look at your options. So we'll understand what your current lender is offering you, and we'll then be able to look at what other products are out there. It's all about being prepared and knowing what else is available to you. The mortgage capacity report will allow you to understand what the monthly repayments are, what the options are, what the interest rates are, everything that you would need to know. It may even involve you extending your term, as I said earlier. So it may be that the current rate that you're on is great, but it's going to increase because you got that rate during COVID. And you may need to extend your term just to be able to have a repayment that is still affordable to you. So I know this is a stressful situation for a lot of people. I get calls about it, I get questions about it quite frequently. What am I going to do? Don't stress. Have the conversation with your mortgage broker. The other thing that I will do during the mortgage capacity report is look at the protection that you have in place. Hopefully, your mortgage broker or your bank had a meaningful conversation with you about income protection, critical illness, and life cover. Life cover is the easy one. People usually take up the life cover, but the income protection and the critical illness are bits that quite often people don't take up. So during the mortgage capacity report, we'll look at what's in place. We'll make sure that the protection that you have in place is appropriate and it's still fit for purpose. Have you had additional children since you took that out? Anything can have happened. So we want to make sure that we look at your budget, we go through your affordability, we go through your outgoings, we understand what is going to put you in the best situation when you come off that really low fixed rate. But the key is to be prepared. As they say, people don't plan to fail, they fail to plan. One of the assurances that you have when you work with me as a mortgage broker who does charge a fee. So I do charge a fee, but you pay me for results. You don't pay me for promises. So the way that our fees work is we do all the work first. So we would do a mortgage capacity report for you. We would find the lender, go through the criteria, do an illustration for you, go through the illustration, make sure that it is fit for purpose, make sure that the term is right for you, make sure that you qualify for the product, make sure that the monthly repayments are something that you are comfortable with. Once we've done all of that, that's when we would approach the lender to do an agreement in principle. So we do charge an application fee for the agreement in principle, but we've already done the work. Once we get you that agreement in principle, if you're doing a remortgage, we then move forward with the full mortgage application. If you go into a new lender, as I said, the new lender is going to take you through the same process that you went through when you took out the first mortgage. So they will do evaluation. They'll have to understand your income, your outgoings. So they'll do full underwriting of your mortgage application. At the end of that underwriting process, they will make a mortgage offer. So you pay for results. If you don't get a mortgage offer, you don't pay a broker fee. You only pay a broker fee if we get you the offer. This is not a promotion. This is not something that do it for the next 30 days and there's no broker fee. This is how our firm operates. We do the due diligence upfront because we know that you don't come to a mortgage broker to get a mortgage. You come to a mortgage broker to get a home. So if you're buying your first home, the whole process of getting a mortgage is that you get those keys. If you're remortgaging, then the whole process of speaking to a mortgage broker is to ensure that you get that remortgage or that product transfer done. There are lots of brokers out there and lots of companies that don't charge fees. We are here to get you a result, and we are a fee charging brokerage. And what that means is you are going to get a level of service that is reflective of the fee. If you're a first time buyer, if you're remortgaging, if you don't understand the process, you may need a little bit more help. You may need more support. And that's what we're here for. Not all brokers are the same, although we do tend to use the same systems. Not all brokers are going to deliver that level of service. So make sure that you're not making your selection based purely on, do I have to pay the broker or is the broker free? What we do is a heavily regulated service. We're all compliant with the FCA. We have lots of things that we have to do, and we are licensed professionals. So don't be afraid to pay your licensed professionals. That's not to say that there aren't some great brokers out there that don't charge a fee, but quite often, like they say, you get what you pay for. So my name is Anthony Lindsay, and if you need a mortgage broker, if you need to speak to someone about a mortgage for a remortgage, for a first-time mortgage, for a buy-to-let property, or even for commercial, make sure that you reach out to me. I make these videos to share information and to inform my clients and the general public. These videos are not intended to provide financial advice, legal advice, or tax advice. And they're not designed to replace speaking to a qualified professional who understands your individual needs. So make sure if you don't have a broker or someone asks you, do you know a broker? You can share this video with them. Make sure you like, make sure you subscribe, and also make sure you share this video. If you have any comments, if you have any questions, or if there's any topic that you'd like for me to cover in one of my videos, please put that in the comments. We do find that a lot of people watch, but they don't necessarily subscribe. The subscription tells YouTube that people are interested in the content. So even if you've just watched it for a minute or two, make sure you subscribe. I do create new videos at least twice a week, and I try to cover off topics that are related to the questions that people are asking me every day. My name is Anthony Lindsay, and I appreciate you watching. Please share, like, and subscribe, and don't forget to leave a comment.